I want to use some on-chain pricing models as well as technical just to kind of position where we are at the moment. So many of you who've watched this channel will know what the realized price is down here in blue. The realized price is the average cost basis of every coin in the supply. That includes lost coins and all that kind of stuff. Now, for those who read our Coin Time Economics report, which again, you'll find in the description below, Coin Time Economics was this framework where we used how long coins have been dormant to calculate what we think is a much better estimate of the active investor cost basis. And that's what's going on here with this orange curve. I'm just going to quickly turn off my tooltip so we can actually see what's going on. So this orange version is actually just the realized price divided by liveliness. I won't go into the technical details. Suffice to say, this is capturing all of the active investors. We don't care about all the lost coins and the early miners and the Satoshis of the world. Let's exclude them. I only care about people who are active in the market cycle. Now, this is currently trading about 36,000. This is best thought of as a bit of a fair value model. The market tends to oscillate around it. Particularly in 2016, it kind of approached it. And as we get above it, we start to move into a bit of an acceleration phase back here. 2019, we poked our head above it. We spent some time oscillating around it. And really, as we broke through in October, this was the first time that we now got a significant portion of the market back into profit. So that shifts investor psychology. That's why this really matters, because you now have a supermajority of investors who are active back in profit. So behaviors start to shift. We move from I bought the bottom and I'm hanging on. We start to move into, well, 150% isn't that bad. Maybe I'll take a little bit off the table. Some profits start to get taken. Investor psychology shifts, but that's also met by, hey, prices at $44,000 and demand starts to flow in. So this is what kind of makes for that shift from the recovery, the uncertain recovery phase, into what we've been calling a bit of an enthusiastic bull, right? So we're now up into that zone where things are probably going to get a little bit more spicy. Now, how do you actually measure what that looks like? Well, we've used another series of workbench functions here, which we call subset. So the subset is essentially taking just a slice of price action between two starting and end dates. And all we want to see is how much does price oscillate around this fair value model. So you can see here that 2019 was super choppy, plus or minus about 50% in either direction. We traded above and below that level, with March 2020 obviously standing out. Likewise, back here, we traded from a low of about minus 50% below it all the way up to breaking above. This was kind of the start of the euphoria back here in 2017. And we've seen here that we've started from about minus 40%, if my memory serves, to breaking up to about 38% above. So we're starting to get this chop. We can see that there's this choppiness that tends to happen around this fair value model. We've broken up from that realized price, that very floor kind of, all coins considered. We're now up slightly above that fair value model. And if 2019 is any kind of model, there could be some chop to go along with this. Now, one last sector here between there and breaking the next all-time high, which is where we curtail these. This was somewhere between, I think it was 14 months from memory. 2019 was about 20 months. We have been about 11 months since breaking the realized price, and we are obviously not at all-time high just yet. So that would tell us, and again, history is obviously just an indicative, but history would tell us that previously it's been between about 14 and 20 months, and we're about 11 months into that journey. So if history is a guide, we may have some choppy volatility and some sideways and some kind of not going anywhere ahead of us. Again, none of us actually know what will happen, but just kind of looking at how the market played out in the past.